todavía probablemente recojamos algunos más. Mientras tanto, ponemos la mirada en esa cuenta atrás que tenemos ya de cara a la próxima reunión de política monetaria de la Reserva Federal de Estados Unidos. Y para hablar de las expectativas, contamos con un analista internacional, con Jay Pelosky, fundador de TPW Advisory. Jay, thank you so much.
Hi, Marta. Nice to see you. Happy Friday.
Thank you so much, and happy Friday and a weekend for you too. Jay, the countdown is running out. Next week we will know the monetary policy decision of the Federal Reserve. Do you think a 100 basic points rate hike is possible?
I guess anything is possible in these markets, Marta, but I think it's unlikely. Our view has been, and the market's view has been 75 basis points, and that will mark the end of the Fed aggressive front loading, which has taken interest rates up dramatically. For example, mortgage rates in the US over the last year are up the most 300 basis points since 1980. So it's the fastest rate rise in 40 years in the United States. And so we're expecting 75 basis points. The key is whether that's the end of the aggressive front loading, right? 75 basis points 3 or 4 times in a row has never happened before in the US. We think it will mark the end of the aggressive front loading, and November and December rate hikes will be either 50 or 25 basis points. And that's important because we think it will mark the peak in the US dollar.
And Jay, this week we have known inflation data from different countries: Spain, Germany, France, UK, and of course United States. It was this Tuesday. What are your expectations as central banks try to act to control this high inflation?
Well, certainly in the case of Europe, it's very much energy driven, and that's pretty clear. And as a result, the ECB is raising rates. And that's one of the reasons why we think the dollar is likely to peak here, is because the interest rate differential between the US and Europe has actually narrowed by about 50 basis points in the last month. It peaked at about 277 basis points and now is about 230. And so to us, that's a support for the euro as well as its historic undervaluation. Our expectation has been and continues to be that we're on the downside of inflation. We do believe inflation has peaked in the United States, that it did so several months ago. And by the way, if we average the inflation month over month inflation rates we've had in the US over the last 2 months, inflation would fall to roughly 3% by March of next year. This is something that people are not really talking about. But if we stay at 0 or 0.1% month over month CPI in the US, by March we'll be down to 3%. In the case of Europe, it's obviously a little trickier because of the energy environment. But even there, energy prices, Dutch natural gas prices have gone down 45% in the last month. Goldman Sachs and others expect it to fall another, to fall another 50% by the end of the winter. And so clearly we're on the downside slope for that as well. And that should lead to lower inflation, notwithstanding the fact that, you're starting out from a high point. It's going to take longer. We think the ECB is going to raise rates in 2023 more than the Fed, which is another reason why we think the dollar is likely to roll over in the coming months.
Jay, FedEx CEO has confirmed that the US is in recession. It's what he said on a CNBC interview with Jim Cramer. Are you agree with him?
Well, I mean, he has a view perhaps that FedEx and its business is in recession. I don't think he can speak to the whole economy. And by the way, notwithstanding the warning by FedEx, earnings revisions in the US and in Europe are both running ahead of where they have been. So they're actually turning up And so you have to be careful not to extrapolate too much from one company, even one as big and as active as FedEx. You can't extrapolate from that company and say that A, we're either in a recession, or B, earnings are going to be disappointing, which is what the stock market really cares about. They don't care about one person's view on recession. What they care about is a big, important stock warning on earnings, and that suggests or raises fears that other companies' earnings are going to disappoint as well. Because let's remember, after the Fed next week, we move into earnings, and earnings are going to be the thing that investors are going to be looking for. We continue to think that earnings are going to be okay, that a high nominal growth environment leads companies to have some pricing power. They're very focused on the expense side. That should allow earnings of roughly 4 or 5% for Q3 year over year, which is, I believe, the consensus estimate. We think that estimate will be met, if not surpassed, and that should support equity markets both here and in Europe.
Jay Pelosky from TPW Advisory, thank you so much. It's been a pleasure.
Always, Martha. Take care.
Nos quedamos, por tanto, con esa visión que nos trasladaba Jay Pelosky. Nos decía, bueno, sí, FedEx, el CEO, puede haber dicho que contempla una recesión en Estados Unidos, pero al final no olvidemos que estamos hablando de un sector, de la perspectiva de una sola compañía en un sector concreto de la economía estadounidense. También nos decía que él no cree que la Reserva Federal opte por una subida en 100 puntos básicos la semana que viene de los tipos de interés. Y atención, porque en el marco de la cumbre que está teniendo lugar estos días